Hey traders, welcome back to another Sunday video. Hope you're doing well here. As we prep for a week ahead, we're going to be talking about setups on things like commodities, indices, currencies, and so much more. I'm going to be sharing with you all of my current positions, things that I'm watching in the financial markets, and some things to keep an eye out for as we go into this busy week ahead. I just want to say, as we get started here, I just want to show you a little bit of an updated view of my personal trading performance on the public account that I've got here on WeBull. This account is hitting recently fresh equity highs as well as balance highs. Things have been going really well this year. I've got this year so far, I'm up about 10% on this trading account, which is not, the most impressive figures in the whole world, but 10% not so bad. I haven't really partaken very much in the indices side of things. I mean, I guess I have, but a lot of these gains have been really from trading gold. I've had a really great run so far this year on gold, and we'll see if that win streak can continue from here. So with that said, just wanted to show you that as part of my, kind of goal with my YouTube channel is to really document my trading journey and to share things that have helped me in the, progress that I've made. So I think part of it is going through my own trading performance is important. There are times when things are not going so hot. Right now, again, is a good streak. And one lesson that I'll leave you with before we get into a bunch of charts is that when things are going really well for me, I tend to size down. I actually try not to let it get to my head, if you will. Even after doing it for all this time, it is easy to make the mistake of getting overconfident with your strategy, getting overconfident when you're doing well. And so just wanted to leave you with that thought. So again, we're going to be taking a look at a lot of different charts here today. And I want to start by taking a quick look at the dollar index, which despite the odds here actually broke out of its recent structure high. And I'm going to talk a little bit as to why I think this may have taken place. But first, why would this be a little confusing to some traders, especially people who are watching the fundamentals? Well, it's because the producer price index and the consumer price index this week both actually showed, cooling down in the inflation story. Now, cooling down in the inflation story, what does that do to the dollar? Well, it pushed the dollar lower, and it actually should, on paper, make sense that the dollar would move lower on cooling inflation data. Why is that? Well, if inflation is starting to cool off, then the Fed may be in a position to actually start cutting interest rates. Remember that if we go take a look at inflation data here for a second, this is going to be a really key thing to note here, is when we look at U.S. inflation, if U.S. inflation starts to meaningfully trend lower, the Fed will have the green light to cut interest rates, which cutting interest rates without getting too high on the macroeconomics side of things, just know that usually cutting interest rates is a bearish thing or a weaker thing for its currency, the underlying economy's currency, because again, it basically lessens the demand for that currency in the form of foreign investment. And again, lowering interest rates can lead to money printing, which means more dollars equals the existing dollars in rotation are less valuable, right? So there's a number of reasons there, but keep an eye on inflation. We had some progress in the inflation department. So why on earth did the dollar bottom out and rip through the highs this week? Well, it all came down to what we kind of saw from the Fed press conference that followed, which was one rate hike is on the table. And a lot of people now, before I get any further with that, what do you mean one rate hike is on the table? Well, this past week we had the FOMC press conference and statement, and we also got the economic projections, the dot plot. And the dot plot is just basically a range of outcomes that the Fed and the members of the Fed have voted for, what they think is likely to happen. And a lot of people were thinking, well, the Fed is going to be, happy with this inflation data. We're going to get 2 rate hikes this year. And I'm sorry, I'm saying wrong. I apologize. Let me back up. Rate cuts is what I meant, not rate hikes. Let me be very clear. It's 2 different stories. Rate cuts, the reduction of the federal funds rate. But we actually saw in the numbers only 1 rate cut is on the docket, at least right now, from the Fed. And so that was a bit of a change in the nature of the expectations. So the dollar actually rallied on that. That's also with context to their other central bank peers. Remember, the dollar is priced against its peers, the euro, the pound, etc. And the peers seem to be looking like they're going to keep cutting rates. The ECB, the European Central Bank, has already cut their interest rates for the first time. The Bank of Canada also has cut their rates. So we're seeing this trend where, non-US central banks that are, the big Western allies are cutting theirs, but the dollar may remain strong because relatively it has not seen cuts. Now, from a bullish or bearish perspective, where am I at with it? Well, I think I remain very cautiously in the center. I'm very neutral, and it would also make sense because, look at the Edge Finder. The top setups algorithm takes into account all the economic data that we look for clues on what could be happening next with Fed rate cuts or not. So with economic data giving us some mixed signals, specifically on the dollar, there's no top setups here that really use the dollar except for dollar Swiss, which I do remain bearish on. I have a bullish view on the Swiss franc in the shorter term as we're getting a lot of strong readings in relation to other currencies. That being said, if you're looking at the dollar, for me right now, there's just not a huge bias either ways. From a price action standpoint, that's a pretty impressive breakout. The dollar very well may see a nice push to retest the highs of this level. And I think that that's possible, that it could also put some pressure on the indices, which have had really strong closes recently, and in my view are probably due for a little bit of a pullback. And again, in my view on this, I don't like to short the indices when they're ripping higher like this. I usually will only short them if they're in downtrends. But I do think that there is some room for this to pull back, and maybe a stronger dollar on, less rate cut expectations could be the bearish catalyst that does take these things down for a few, days or even weeks. So something to think about when it comes to the indices. My thought process is, again, I think we may have room to the upside. Let's pivot for a moment. I want to take a look before we get into a whole bunch of charts from here. Let's take a look at the commitment of traders data to see what institutional money is doing on the latest filing. Remember that the commitment of traders data allows us to get an inside look at what institutional money is buying and selling on a week-to-week basis. If you've never used this in your analysis, then I highly recommend you take a moment to kind of rewatch this segment of the video if you find it helpful. I'll try and go into some depth here. So the CFTC reports weekly the commitment of traders data. Now, the commitment of traders data is just a report that shows the net positioning of large institutional investors that are required to report their holdings. And what we can see here is the aggregated data. Our software has allowed us to aggregate all of that into one single report for the convenience of our users. And so what we can see here is that, we have things like gold, oil, and silver that are proportionally getting very high long ratios. There's a lot of positions on the long side for these things. And then if you take a look at the Swiss franc or the yen or the Canadian dollar or the Aussie, these ones are getting proportionally very short buys. Now, this is a longer term indicator, but what's not so longer term in my view, and why we've built this secondary table, is the week-to-week filing. Now, this week-to-week filing allows us to look at what they did in the latest week to things like oil, and you can see that they decreased long contracts and decreased short contracts vastly more. And so my point was showing you that is that when you look at these different week-to-week filings, it can be very useful. So if you're somebody who watches gold like myself, you can see that they decreased long contracts, but they also decreased short contracts. So let's look for one that is a little bit more obvious, like the pound. The pound, they greatly increased their long contracts and just mildly decreased their short contracts. That would be a very bullish week overall on the net positioning here for the pound. And so that would show that institutional money has been aggressively buying the pound. Now we can also flip over to the downside here and take a look at some assets that have been sold in the latest week. Again, more of a bearish shift on particular assets. It can be worth noting which ones are doing what. So if you, again, have not used the commitment of traders data report, it is very, very useful whether you trade commodities or indices or currencies. It could be very useful to see what institutional money is up to. By the way, if you'd like to get access to this report, our company, A1 Trading, builds tools for traders. And if you don't already have a copy of the Edge Finder, there's a link down below in the description. Also, if you use the promo code on the screen right now, YTVIP at checkout, Write that down. It'll get you a nice discount off the tool. Thank you very much for watching my videos. It does support, kind of what we're doing here. And from a software company perspective, we're always trying to build better tools for traders who are looking to utilize them. So take advantage, get a copy if you have not already. And yeah, let's keep pushing on and talk some charts now. You'll see that in terms of the top setups window, we have gold here, and we also have bonds, the 10-year treasury bond. Is that something that I'm positioned for? And again, when I show you these tools, I'm showing you stuff not just for, not just making stuff up or sounding fancy to make YouTube videos. I'm going to show you that, these are setups that I liked. Very bullish reading for bonds and a bullish reading for gold. I liked them so much that I actually ended up putting, hard-earned money on the line. So I am long gold. Let's take a look at gold together. I bought GLD, which just because I'm in the US, my limitations to trading gold spot price are there. So I have to, either trade futures or trade with an ETF, which is what I've chosen to do. I've chosen to trade GLD. So gold, I am long gold as long as we continue to hold support around current levels. We did get a nice bounce on Friday. That's a good start. Let's see if that can follow through. If it doesn't, I stop out below the market structure lows there, and I'm very happy to do so. Now, for those of you who are trading XAUUSD or spot gold, you can see it's the same chart and the same principle applies. I'm looking to stop out if we break through the lows, but if we get a nice run from here, then that would be excellent, and I can look to trail stops and manage risk from there. I also think yields could continue to come down, and I am long TLT. Now, TLT is a bond ETF, and you can see that I've got a position open on this one. It's made a nice move recently, and I think we're off to finally a good start in the right direction. TLT is, again, a bond ETF, and bonds will typically go up when yields are falling. And so when yields are falling, as they have been recently, off the idea of maybe some cooling inflation, as well as maybe an economy, the labor market starting to slow down. I'll show you more evidence of that in just a moment that I've been noting myself. And again, I want to keep my position here on TLT open. So this is more of a swing trade for me. Gold is, well, both of them are swing trades, but this is more of a position trade for me that I've held for some time now and plan to continue to hold. When it comes to gold, it is a momentum trade. I'm looking for this, kind of higher time frame to continue its upward trend off of the daily. As long as we hold support, I remain long gold. But if we break that, like I said, it's time for me to cut the trade and take a loss on it. So I'm keeping an open mind on gold, but that's something that I am personally watching. Let's take a look at the indices for a moment. I touched on them briefly, how I mentioned that I think that there's probably some pullback coming for the indices, but not all index is created the same. I'll talk about, the lag in the group, the Russell and the Dow Jones in just a moment. But from a perspective of the S&P 500, which is the most commonly talked about index, we're looking to see if we can get a pullback. That's both myself and Frank, we both are looking at the indices, and while I do think that there is more upside coming this year, I think we're a bit overdue for some pullback. We've had a really nice push, another really nice push before that, and this pullback that happened in April was a good pullback, and I actually got long on some positions there. In fact, I'll show you those really quick. You know what? Let me pause. I'll come right back. So here's some positions. As I mentioned, I went long the S&P 500 on the dip in April, and now I'm selling calls against my position. Same thing with XLK, which is a technology ETF, and there's my gold and TLT position. So these are all of my current active trades going on right now in the account. I really don't have that many, but I'm holding on to and working with a couple of good winners on the account, which is a good position to be in, and I'm definitely not complaining. I've been having a nice win streak recently, and looking to let that continue to ride as long as it does. But again, prepared at any point for a drawdown to take place in the account. Anyways, the S&P 500, I'm looking for, again, if it pulls back, that would be great for my positions. Obviously, I am long as of over in this general area. I bought VOO, which is an S&P 500 ETF. I am long the S&P, but I've sold calls against my position. So what that means is that if the market keeps ripping higher, I won't see any of that benefit, and I will just be taking profits on my position, being called away from my shares is what they call that. But if the market rolls over, I will continue to make profits from my position that I'm holding long, but I would also make money by making the decision to sell calls against my the underlying or the shares that I own. So I do have sort of a bearish bias in the short term, but I am not willing to actually go short on the market, if that makes sense. Same thing with the NASDAQ. Again, these things are just off to the races. Technology is just leading the pack by far. If we were to take a look at some sectors, which maybe we'll talk about later in the video, the technology sector is just killing it. Software has made a big bounce with, Adobe shares jumping. That was another recent development. And, Apple making a jump to all-time highs again. I mean, really some technology dominance taking place. And we can see that also in the Dow Jones. The Dow Jones, not so tech-centric, and also not doing so hot. You can see at this point, while the NASDAQ is reaching fresh all-time highs, the Dow Jones closed on Friday down from its highs by about 3.86, which is not that much, but you got to think when the indices are making all-time highs and they're incredibly bullish and the Dow Jones is not partaking as much, what is the reason there? Well, you know what else is not partaking is the Russell 2000. The Russell 2000 is small cap stocks, and companies like this not partaking in the rally is, in my opinion, a concern. Now, not only are they not participating recently, but this is not an all-time high. The all-time high was back in 2021. And again, with Russell stocks, smaller cap stocks not doing as well, it does draw some, concern in my opinion. I think that the inflation story remaining sticky, as we discussed earlier when we talked about that inflation chart, I think that is a bit of a problem for certain areas of the market that are more interest rate sensitive. If we're going to see an environment where rates don't come down for a suspended period of time, it's going to unfortunately hold down certain areas of the market more than others. Technology, like the profitable tech, the Apples and Microsofts of the world, they just, doesn't matter what interest rates are doing because they have so much cash, they don't need to borrow money. But companies that do need to borrow money will be hurt by higher interest rates for longer. And so that's the kind of problem for small caps right now. And this is coming from someone who I really, really want to buy small caps. I've talked about this for a long time. I've been waiting for the clouds to roll away. I've been waiting for what we need to get small caps to run. Now, why, Nick, are you so interested in the Russell? Because when the Russell makes its greatest moves, they are violent and they are incredible. So like, for example, if you were trading 2020, look at that. That is a 136% return, give or take, from the lows. And that wasn't even the lows, or the highs. So if you 150% gains in rapid succession. So the Russell, the trade for the Russell is going to be a big one. It's just a matter of when and looking for the right signals. What I'm looking for, which is not currently available, is inflation. In my opinion, is not looking great. Inflation needs to be coming down materially, but at the same time, growth, or let's call it the economy, needs to be strong, right? You need a growth environment. You need a real, kind of an early cycle in a strong economy. And I just don't think we have that scenario right now. Again, I want to be long the Russell, but I don't quite see it. So let's get into some of those stats, and then I'll come and take a look at some more charts. But let's get into some of those stats. Again, inflation remains problematic. The blue chart represents the US dollar. But let's have a look at some other economic data points. GDP growth. Again, another very important component is the economy. This is the gross domestic product. And we can see here that we've missed expectations twice in a row. So again, GDP growth for the Russell and for, generally speaking, for like the dollar and stocks to rally, you want to see a strong economy. We've not quite seen a ton of confidence on the GDP front recently relative to growth. What about PMIs? This is the Purchasing Managers Index, which allows us to look at what, again, purchasing managers are feeling about the economy. Well, the services sector looks real good, but manufacturing has missed the recent expectations. Let's keep going. What about retail sales? Now, note, we do get retail sales this coming week, and I'm very, very honed in on that. I will be watching the retail sales number, and we'll be live streaming for that if you'd like to tune in. By the way, hit the thumbs up button and subscribe if you're new to the channel. You can tune into our live streams if you hit the notification bell next to the subscribe button. It'll notify you when we go live. We are live during these events, and if you're a serious trader, you'd like to come trade alongside us, we're doing live analysis of economic data. So if you're enjoying the fundamentals chat, again, come join us live. Speaking of which, one last plug. In the description down below, a couple things. You've got Telegram and Discord Come get involved in the action. It is free to join these two places. There are links down below in the description to join in on the action and keep up to date with our analysis. I say ours because it's Frank and I. We kind of take it together, right? We do a lot of analysis, a lot of writing. Frank is more of a writer. I'm more of the video guy, but together we do a lot of analysis. So make sure to join those. They're free resources to you, so take advantage. Retail sales last time around was weak. Will we get a repeat? That is coming this week. It should be very interesting to see. And also, all of these economic data points that I'm talking about get factored into the Edgefinder scoring. That's the whole purpose behind this tool. Is it's great to go through all these data points, but from a trading perspective, I just want all these data points factored into an algorithm. That's the top setups page. We'll come back to that in just a moment. Jobs data last time around was stronger than anticipated. But that's just on the jobs data, and this is a one-off print. Please remember that, again, last time around we had a miss, so the next one is going to be important too. So that's one piece, but check this out. I want to show you something else. Unemployment claims remain relatively elevated, so people are filing for unemployment. We had more unemployment than what was expected filed for in the latest one, and that's the second time in a row. We get these every Thursday. Job openings, look at this. Job openings are materially lower. They are trending down. And I had somebody point this out in my chat room inside of our Discord, which again, join in the description down below. We were talking actually about something very interesting. He pointed out that if you actually take a look at JOLTS, they're coming down, but they're just getting back to pre-pandemic era levels. And this was a good point. This was a good counter argument to what I was saying about JOLTS jobs or JOLTS job openings deteriorating. I was pointing out, that's a little bit of a red flag. And this individual who's been in our chat for a long time, and shout out to Kevin if you're listening, he pointed out in response that, well, they're just getting back to pre-pandemic levels. Is this a red flag? And the answer, in my opinion, is that's actually a really great point, that it's just coming back to pre-pandemic levels after this last couple of years. But the direction is what I'm very intrigued by. You'll see that usually this stuff trends for some time in one direction. And if this trend continues, there is a possibility that we overshoot the pre-pandemic levels. It's very hard once data starts coming in a certain direction. It is hard to get it to reverse. It doesn't usually snap and just change direction. It usually, trends for quite some time. That being said, the Fed is also pushing back on when the rate cuts are actually going to come. So we could see a suspended period of time further where this data continues to cool off. And these are job openings. So if they continue to deteriorate, that's showing you that the labor market may be showing signs of cooling. But look at unemployment. Unemployment rate is also trending higher. So these things are showing us that the labor data seems to be cooling. And my only concern with this, and why I am personally long gold and bonds through TLT, is because I think that there is a possibility that the Fed may start to see more of a sign of a slowdown in the economy than what people are thinking. People are thinking that the economy is just red hot and that it's going to rebound and rate cuts and we're going to have a perfect soft landing. And we might have that. But I like the prospect of keeping a portion of my portfolio dedicated to trading alongside gold and TLT in the event that we see economic data slide and inflation. If inflation does not slide, I like gold a lot. If inflation slides and the economy slides, I like TLT. So I'm hedging my bets here a little bit by staying where I currently am. I'm long gold, I'm long TLT, and I am long stocks as well, but I've capped my upside through those covered calls I showed you earlier on in the video. Let's go back to this top setups page for a second, because now I think that by going through that economic data, if you're still here, hopefully you'll understand this a little bit better if you're newer to my videos. So now that we've looked at things like the GDP prints and PMI numbers, retail sales, inflation, jobs data, why does all that stuff matter for active swing traders? Well, because these are the real trends in the economic data that are making the markets move one way or the other. So you may ask, Nick, why are you so bullish on gold? Well, let's take a look at it. We've seen GDP prints coming out lower than anticipated, and the manufacturing data was a little lackluster. Services PMI was good. So you'll notice a trend here. Slowing economic data gets on our system a bullish reading for gold. And we're calculating up scores here, which gets summarized in the total score and the bias column. Okay, so stay with me here. Retail sales was lower than expected. Inflation is coming down, but still in a higher place. That's a very good spot for gold's bullishness, right? You want inflation, but you want, signs of it cooling, as well as with that, signs of the economy cooling. That's the other big one. Employment change was strong, but unemployment rate continues to trend higher. You can see how I'm reading through these scores and understanding the fundamentals without even looking at the actual economic data. Interest rates, again, yields falling, positive for gold. So the overall, and by the way, COT data looking strong for gold, as we talked about earlier from the COT scanner, which you can pull up on the tool, so on and so forth. So that is why I got bullish on gold. And then I liked the setup, as I showed you earlier. The chart looked really good. So I kept going with it. Again, if you guys don't already have a copy of the Edge Finder, take advantage. Click the link down below in the description, get a copy of it. Use that code YTVIP for a subscriber discount. Okay, so let's take a look at some currencies here. For the currency traders out there, take a quick look at the Euro USD, which really started to fall apart. The dollar's strength just seems to have really come back into the picture. To me, this looks like, even though I don't have any actual biases from the Edge Finder, technicals wise, looks like it may be heading back to retest these lows. And it may take a stop before it makes its move down there, but the general direction to me looks to the downside for now. Pound USD, a little bit more mixed for me. I really can't give you a strong opinion on this one. I think that, you may range in this area, but in my personal view, I would actually be slightly kind of bullish on the pound. As the euro, they've already cut rates. They look like they may continue to cut rates. The pound is likely to cut rates too, the Bank of England. But the question is, it's not nearly as dovish, I would say, as the ECB seems to be. So I think you may see a bounce here, but I'm not particularly bullish or bearish when it comes to the pound against the dollar. The dollar yen seems like it just wants to drift higher. That's just the story for this one. It's been the story. The Bank of Japan is in trouble. They're dealing with their own problems, and they've been doing so for some time. So I think if you get a break through these highs, that's just another kind of rip higher on the idea that the yen is just in free fall. But I really don't have a strong bias on this one because, again, it's not on my top setups page. If something is not on the top setups page, then I usually won't actually take trades on it. I may still comment on it just because, I like to keep an eye on these things. But this one does have a setup, and this is actually a trade that I am in currently inside of the VIP room, inside of our Discord channel. So I am short currently. This is one of my FX trades currently. You can see I am short. Let's take a look at USDCHF. So I shorted this one after it retested resistance, put a stop above the highs, and the market has been doing well so far. So I like the prospect of further downside for USDCHF. And why did I choose this one? Well, because again, it showed up on the Edge Finder as a very bearish score, really getting a lot of score points for almost every single category. So I really like the Swiss franc on the long side in the short term. Again, that marries up nicely because the Swiss franc is a risk-off currency. It might perform well, where I also think that the S&P and the NASDAQ may pull back. So I'm liking the risk-off side of things right now. I'm a little bit more on the cautious side, if you couldn't already tell. And again, I'm looking for downside on USDCHF. If we can break through these lows, then great. I'll continue to hold the trade. If we actually break through these lows, I'm looking to trail my stop loss into profit. So I will keep members updated. If you'd like to join this is also linked down below in the description of this video. You can join, and there's me, and there's also Frank as well, the guy that I mentioned earlier. He does a lot of our written content. So check out the VIP room down below. Same thing applies. There's a discount code that can get you a nice discount if you'd like to see the trades being taken. Again, on real accounts, no nonsense, just straight up. A lot of people, when they talk about trading signals groups, they are frustrated by them because they just feel like, this person's just firing off shots just to sell me a dream. But you have to understand, when we take trades inside of the VIP room, these are our real trades. This is our live hard-earned money. This is size of the trades that I'm taking even are way more than the membership. So please understand, when I'm taking trades, my priority is to take the best possible trades for my own trading account. And I'm not always right. I definitely have, losing streaks and stuff, but we've been on fire in the last year. So if you're not already in the VIP room, come join us. Link is in the description down below. Last thing I will say is, I mentioned the brokerage that I'm using to trade directly on WeBull. There are several in the description of this video. There's several brokers that will allow you to trade trade directly on tradingview.com. It is so incredibly convenient to be able to pull up trades directly here. And, if I want to modify my orders or whatever, I can do all of that directly in tradingview.com. If you have not already gotten set up with a brokerage that can do that, here's something cool for you. I got some free game for you. Down below in the description, you can check out those links. Those are referral links. And if you choose to use them, you will be supporting my channel. But also, each one of them has some special sign-up perks. So take a moment, read through some of the sign-up perks that are listed down below in the description with the brokerages there. And if you choose to use them, again, they're all great brokerages, all regulated brokerages. So if you're in the US or outside of the US or trading CFDs, or you want to trade stocks or options, I've got a list of brokers that might be useful to you if you're looking to make a switch. Thank you very much for tuning into today's video. I hope you have a great trading week ahead. Trade safe, guys. We'll see you next time.